Let's look at what Bitcoin is doing today. We need to catch up on the money market funds as well as the Fed balance sheet. We haven't looked at that in a little while. Let's get started with the economic calendar. So yesterday we talked about flash PMI that came out about the same. One thing I found interesting was that new home sales came out much larger than expected and much larger than last month. Somebody's banking on those interest rates falling soon. I wouldn't get too excited about that. Let's see, consumer sentiment, that's going to be good. Durable good orders came in slightly better than expected, so that's good. We have one Fed speaking at 11 a.m. Eastern. This is a non-voting member, though, so I wouldn't really be concerned too much about what they have to say into Bitcoin. So Bitcoin is doing a tiny little pullback today, but I do like this tail on bottom. That's not too bad. I like that the slow stochastic ribbon up here is pinned to the top. I would like to see the fast one come down a little bit more and then turn yellow again, which would indicate an ignition of that fast momentum, which could take us much higher than we currently are, maybe even hit that 70,000 finally. That would be great. So Bitcoin's looking like that. Stop by this weekend for a crypto weekend. We're going to talk a little bit more about Ethereum, Sol, and Doge this weekend as we take a look at the upcoming, hopefully, wave of crypto coming through for Moonvember here that we are soon coming upon. All right, let's take a look here at some miners here. So CleanSpark's down 2.34% today. I don't love that. I do like my oscillator here. This isn't looking too bad actually. Those big moves, like you can see, the big moves always look like this on the oscillator. It's kind of great. It's getting a bit weaker with the momentum. I would not be surprised to see us come into the 50, potentially even the 21-day moving average, which would be $11 or $10.92 currently. If we were to do that, I look at that as a potential scooping area where we would scoop up to the 200, which could take us up to $14, maybe even $15. Again, this coming week is the week before the election. Expect some volatility. Expect some things to come out of left field at you. We're going to probably continue to experience some shakiness until the election is called. So we are looking for that weakness to come through for at least a day or two somewhere here. We've been getting it the last couple of days, but it could continue until the election is over. Either that or if something else comes through and we just absolutely break through all of the resistance ahead of us, we could find CleanSpark, trading $18, $19, $20 again before a long time. Now, something I do need to do and we'll do soon is a new when moon for CleanSpark and for Bit Digital. CleanSpark added all that potential dilution that we need to talk about and how that affects the overall outlook. Bit Digital kind of changed its whole business outlook. They're still doing Bitcoin mining. They're still sticking their Ethereum, but they're making HPC a significantly larger portion of their business. So we're going to need to talk about that and how that may impact my outlooks for that company as well. But let's look at Bit Digital right now. Bit Digital is actually looking great. It's kind of stair-stepping its way up, making those nice train tracks. I would like to see it. I wouldn't be surprised, to see it come back, maybe not to the 200, but maybe to the 50 this time, which would be about 341 right now. You can see that on the oscillator too, just kind of like waving up and down to the top to bottom, top to bottom. Well, it's at the top right now, so it's time for it to come back to the bottom. And that has been looking like moves anywhere from top to bottom from 36%. Whew, that would be a nice haircut, wouldn't it? 36% to 23%, so it's getting a little bit smaller. We might see it. Oh wait, the one before that though, the first one, since the summer was 45, 36, and 23. So this time maybe we'll get like a 15. What would be this time we could take us down to the 50, get like a 17, 18 pullback, and then carry on ripping from there. For Bit Digital, that's pretty exciting. I think once we see Ethereum get unleashed here, Bit Digital is really going to soar because they have almost 30,000 Ethereum, and that would be very exciting to see Ethereum hit $4,000 or $5,000. And we have Bit Digital riding that wave as well. Can you imagine what this thing would be at if we hit $10,000 on Ethereum, like so many people are calling, or near that? You know, could even be a 7 or an 8,000. But they've got 30,000 Ethereum nearly. Okay, it's not 30, it's like 27, 28,000 Ethereum. That would be a significant balance sheet bump for Bit Digital. That's pretty exciting. We're not going to talk about all of them today, but we are going to talk about Mara. Because Mara's down big. It's down bigger than all the others. It's down 5.32%. We're also going to talk WULF a little bit here, and a little bit about CORZ, because those ones were big movers last week. And then stay tuned tomorrow for the weekly closes, where we're going to go over all of the Bitcoin miners that we follow. So we'll get to all those. We'll get to them all. Stay patient. It's fine. It'll be great. Anyways, let's see. Mara. Oof. Mara. So it came down to the 21. It could come down to the 50 at 17. Then once we get that flush down and we start seeing the fast stochastic turn back around again, that's when I'd be looking for it to move on up. Right now it's looking like potential flat to weakness from its current position. This inverted head and shoulders hasn't come through yet. We're still waiting. It came right up to the neckline just to fake you out and take your money. Now it's dropping again. How much has it dropped since it got to that neckline? About 10%. That's actually a pretty healthy pullback. I wouldn't be surprised to see it turn right back around and just cut right through that 200. And when it does, we're going to be back in the mid to high 20s very, very, very quickly. So I haven't really lost sight on Mara yet. Mara is looking interesting, looking primed. It just needs to get that move up above the 200, and then we've got some room to run. Let's take a look at CORZ. So CORZ has been on an absolute tear. Hey, look at that. It's doing kind of what I said it would do, right? Where it came up to the top of this ascending wedge, and it's just kind of riding the top of this wedge. SPY did that a little while ago, and it puked out pretty bad afterwards. So, and it also did that here on the wedge on CORZ back in July, where it came above and then came near the bottom of the wedge before carrying on up. Now, I'm not necessarily saying that it's going to come all the way to the bottom of this wedge, because the bottom of this wedge would be the August 5th lows. I think that would take a significant shock to have that happen. But I would not at all be surprised to, in the next week or two, potentially see CORZ come back down to about 1087. That wouldn't surprise me. Maybe even only 1164. At some point, I think it's going to hit the 50s, is what I'm trying to say. The 50, maybe the bottom of the ATR band sometime soon is what I'm looking for based on this formation. Now, if it just keeps going up, that'll be negated, and I'll say, well, I was wrong. But if it were to come to 1176 at the fit to meet the 50, or down to the bottom ATR band there at 1087, I wouldn't take that as a moment to panic. I would take that as a moment to potentially load up. And of course, nothing I say is financial advice or a suggestion to buy, sell, or hold any asset whatsoever. So that's what I'd be looking at for CORZ. Potentially coming down to the 50, maybe to the bottom of the ATR band, and then from there start carrying on back up. Let's take a look at WULF. WULF has been exciting. Really exciting. Look at this thing. It is currently trying to make something of a bull flag up here. Now, it's not the greatest bull flag I've ever seen, but look at that. Remember when I said when we get over 496, we're going to very quickly find ourselves up at about $6-7? Well, that happened. That happened in about a day and a half. So congratulations to anyone and everyone that is in the WULF pack there. You're doing fantastic. Now, what are we looking at now? We're looking at a potential pullback at this moment. Now, the momentum here is still crawling up, but the stochastics are cooling off. Last time we had a move that this kind of looked very similar back here in September to what we're currently seeing on the stochastic. Very, very similar. And what happened there, once it kind of petered out and came down, we saw a drop of, now I'm not saying we're going to drop this much, but we saw a drop of about 30%. So if we were to do that now, from top to bottom, a drop of about 30% would take us back to about 463. I don't necessarily think we're going to hit that, but we could at some point come. That would take us back to meet the 50 at 476, maybe even the 21 at 523. At this point, I probably think the 21 at 523, or in another week or so when the 50's back up to $5, we might come back to tap it there. I would not be surprised to see that, because as you've noticed here with Wolf, all of these big rips are followed by some kind of like 20% plus dip. So don't be surprised if it's trading back at $5 in a week or two. But again, once the election is over, all bets are off, and I think that we could be seeing Moon-Vember coming through pretty hard. All right, so that's all I'm going to do for the miners today. Come back tomorrow for the weekly closes where I'm going to go over all of them. Now we have to talk about something very, very important. That's going to be market-wide. We're looking at money market funds, not on the Wayback Machine. We're looking at money market funds. This is the current one that came out 2 days ago, and they increased. Look at that. Retail increased, but this time institutions also increased, and institutions increased a lot. So I'm assuming, and we're going to watch this after the election, that they are cashing up for the election. And then once that is over, they're going to start deploying. So let's pay attention to this. Now, if we go and look back at earlier in the year, in April, we were significantly lower on, this was April 17th, 2024. The money market funds were significantly lower than they are today. They were down at $5.968 trillion. Now they're at $6.2 trillion. We're talking about hundreds of billions of dollars more in these things. And retail has increased by about 100, but institutions are up by a couple $100 billion there. So that's pretty exciting. Oh, wait, several $100 dollars, 6.5, 6.2. This was August. So even just since August, we've increased about $300 billion into money market funds, you can see. And let's see, retail is up barely, institutions are up a little bit, but I really want to see from April till now. So from April, we're at 2.4 trillion for retail. Now we're at 2.6 trillion for retail. In April for institutions, we were at 3.56 trillion. Now we're at 3.885 trillion. So we're looking at over $300 billion more for institutions in money market funds. So basically, any increases we see right now are probably going to be a little bit weak. That might also be why, if we go to the SPY, that might be why we saw that big dump off coming all the way down here those couple of days where money was going into money market funds. But wow, we are up today. That is big move up today, 0.65. That's pretty significant. I'm going to have to get in and check this out here in a minute. Anyways, that's that. So let's go look at the balance sheet as well. So the central bank balance sheet, this thing has been dropping since May 25th. What year? 2022. So since May 25th, 2022, it's been dropping. We had that little March 2023 pump for the bank failures, and then we have just been consistently dropping ever since on that. That is why inflation has been on the decline. Okay, but we have reached that 7K mark. That 7K mark is where we rested right after that big pump up in money on the balance sheet for COVID, right? We had this big pump up in 2020. That little resting spot about 6.9 trillion. We're very, very close back to that $6.9 trillion. Now, why is that important? It doesn't mean we've given back all the money from that period in time, just the money that they increased afterward, but we've done this before. We've been here before, right over here. And what was special about this? This was the great financial crisis right here. Right here. And we went up a significant amount, came to a resting point at about 1.8. But in this one, we kind of continued on up right afterwards, right? We went all the way back up to the peak of that money, 2.2, right? We came down a little bit to about 2.3, which is a little bit higher than where they pumped the money initially, right? After the crisis. And then it wasn't even on that. Well, it was a midterm year. It was 2010. It started to, in November of that year, which would have been the elections for the midterm, it just launched. And it just kept going from there, never looking back. And then again in 2013, I don't know why they did that there, but yeah, big pumps, big old pumps. Increasing, and then they started to pull off, and this is where we got that recession in 2018, and then they went and carried on it up again. If this line starts to go up again, this line right here, if it starts going up again and it stops going down, as you can see, it's starting to flatten out a little bit. If it starts going up again, recession is canceled, because this is the biggest supporter of the economy. This makes all stonk go up. So this thing starts going up, right? This one, the balance sheet, starts to go up. And this money market fund number starts to come down. That is serious stonk pumping, okay? So that's what we're looking for. We're looking for those things to happen. We're looking for the Fed balance sheet to go up. We're looking for the money market funds to come down, and we're looking for stonk go up. That is what I'm watching right now, very, very, very closely, consistently monitoring that. I'm also watching margin debt, but that's a bit of a lagging one. You can only see like 2, 3, 4 weeks behind, something like that. But we're watching all that. So that's all I've got for you today. Please like, comment, subscribe, share this video. Check out the Trade Cave store, link in the description, as well as the channel bio. Check out the sticker shop. That link is also in the description, as well as the channel bio, and have a profitable day.